Welcome, everyone. My guest today is Managing Editor James Kleimann to talk about the challenges of the Florida condo market and the chances of getting a housing czar in the next administration, whoever might win. James, welcome back to the podcast.
I'm back. I thought you were sick of me.
Never. And we always have so much news to discuss. Today, really interested in talking about this feature story that Brooklyn Hahn did. Great story on the condo market in Florida and just kind of the double whammy that they're seeing. We've been watching this now ever since, that Surfside condo collapsed in that really tragic way. So now we have all these new things happening to make sure things are safe, but obviously that puts the cost so high.
Sure. Regulation, safety comes at a price, right? And so it really is, as you said, it's a double whammy for the owners of these condos, primarily in South Florida, especially in the Miami area. And we were talking a little bit before we started the podcast that there's this almost mini market of snowbirds from where I live in the New York, New Jersey area. And they all go down to these little pockets in Florida and they buy condos, exclusively they buy condos. And what happened was, of course, the Surfside condo collapse in 2021. It killed, I think, almost 100 people. There were all kinds of problems with deferred maintenance that hadn't been done, and it collapses, right? And the FHFA takes action, the state of Florida takes action, and the legislature in, I think it was late 2022, they passed the Condo Safety Act. And it essentially allows condo associations to level these special assessments on the unit owners. This is in addition to what would otherwise be just regular HOA dues, right? And so in light of the tragedy at Surfside, all of these condos, they have to go through this milestone inspection if they're 30 years old, or if they're 25 years old, or if they're within 3 miles of the coast, right? Because one of the issues with the Surfside collapse is you basically built it on the sand, and ecologically speaking, it just the earth was not strong enough to hold this structure where it was at the weight of it, and it should have been done differently, right? So all of this comes, as I said, at a cost. And there was a Wall Street Journal story, it was a couple months ago. I want to say it was in May, and it talked about this guy. He's a 76-year-old man. And he bought a unit at the Cricket Club. This is an exclusive Bayfront condominium in North Miami. So in 2019, he liquidates his 401k and he purchases a 1,500 square foot unit. Yeah, by the way, never do that. Never liquidate your 401k to buy a property. So he buys this unit anyway for $190,000. But because of this recent state law that requires these older buildings to meet these structural safety standards, the condo board tells all of the owners, look, we're going to have to undergo a $30 million special assessment for all these repairs. And that includes a roof replacement, that includes facade waterproofing. And so when you break it down, that's about $134,000 per owner. $134,000 per unit.
They just have to come up with, right?
Yeah, exactly. So what do you do, right? So if you don't have $134,000 lying around, and some of them definitely do, right? And if you're looking at just demographics, this typically is an older crowd in South Florida that are buying condominiums, and they're more likely than a millennial or a Gen Zoodle or whatever the kids are called these days, more likely to have money than them, right? So, but they don't all. And if you don't have the $134,000, you don't have a lot of great choices. So eventually that unit would get taken over if you don't make the payments, right? So the condominium would claim your unit because you're not abiding by the terms of the agreement, right? That's how an association works. And the other option is you sell, right? So all these people now are looking to sell. And in a lot of cases, they're taking 40%, 50% off what they bought their units for just a couple years prior. And this is not even getting to some of the other issues, right? Like Florida has so many issues with insurance that even despite the wildly increasing costs, probably don't actually come very close to even covering the very literal risk, right? So like, let's say it's $7,000 per person that they're rising, right? The risk itself is probably like 25, 30, 50,000 per person. But that's just like so third rail, no one would ever politically touch, like trying to levy like, hey man, like you got to pay an extra $50,000 in like flood insurance to actually cover the risk here. So yeah, I mean, you have all these problems and now you have a market where you have a lot more inventory, but the buyers know this, right? So if you're a buyer and you're like, hey, it's kind of weird that this guy's selling this condo for $142,000. Man, that seems like such a good deal. I wonder if I should ask my agent to see if there's something else to it, right? And so obviously they are, and they're figuring out that these huge special assessments are coming, and it's kind of a frozen market in some respects.
Well, and the story looks at the number of units that were for sale this time last year and what they are now in this very specific area, and it's almost double. And you can see why, right? I mean,
Yep.
and now if you've owned it for 20 years or 30, if you've been the owner and you didn't pay to keep it up all those years, you kind of, you got through, and it's probably, you've got a lot of value at it. That's totally different than this poor guy who bought in 2019, right?
Yeah. I mean, look, a lot of the owners probably bought 10, 15, 20 years ago. And if you as a condo board or the collective owners of these properties decided not to, devote funds toward the maintenance, yeah. I mean, at some point, like either there's going to be a huge safety issue, which of course we've seen, or
You have to pay for maintenance, yeah.
you got to pay, right? Like, I mean, it's not, these aren't like indestructible. And in a lot of cases, unfortunately, they weren't as well built as maybe they should be, right? So I'm not going to be the old man, yelling at the clouds saying, oh, you should have built like brick buildings with, high tension steel and blah, blah, blah. But like, you buy a property that has a parking garage made of like sticks, like, well,
Right.
at some point, like you got to expect that something's going to happen and, and the bill's going to come due.
I think that Brooklyn did a really good job talking to agents, talking to insurance people, talking to, just a lot of people involved here. And I thought it was striking that the agents, agents are just, it's part of their job. They have to be positive about stuff, right? I mean, it's always a good time to buy, and and good for them. They're salespeople. They're doing a good job, all of that. But even in this story, I mean, they were more sober than some of the interviews we've done over the last year, where it still was, to me, it felt pretty rah. Oh yeah, okay, but this is going to be fine. Or I felt like they were more sober, but also still saw the silver lining. I mean, they were like, hey, but this. If you have a newer condo, then you're going to be great. If you have this, I mean, they're so good at bringing out the positive parts of this, which, kudos to them. But I thought it was striking that even the agents were, more sober than what I've seen in the past.
Yeah, I mean, it's striking because it like never happens, right?
They're eternal optimists. They have to be.
Yeah, I mean, I kind of wish they weren't, but maybe that's just my like ick when I get the sales pitch. You know what I mean? Like I recoil when someone tries to give me a hard sell, and that's just me. I'm sure that works with other people. You kind of see this sometimes with mortgage loan originators as well. Like there's no such thing as a bad market, like that, like date the rate bullshit that people say. I really, really don't like it. Like I think these should be advisors who are transparent with people and look at their financial situation, look at the property and say, and I know, of course, their commission is on the line here, but if you are the 76-year-old man who buys this fancy condo in North Miami, and then a couple years later, like, and you liquidated your retirement to do it, and then you have to take 40 cents on the dollar, like, we should find out who this guy's agent was, right? Like, they did a shit job. I'm sorry. It has to be said. And so, like, I don't know how you could balance, the optimism with, like, look, there's a sober reality here, which is some people are going to lose big.
Yeah.
And you need to be accountable, right?
So what is Fannie and Freddie's role in this? So there's some parts of this because of what's going on with the money, right? That it can put you in jeopardy with them.
Yeah. So Fannie and Freddie, of course, as the GSEs, they buy not just single family, like, in our news context, we mostly write about them buying single family loans, but they also have large multifamily loan programs as well. And they will buy condos, right? They'll buy multifamily properties. And so in the wake of the Surfside collapse in 2021, they basically rewrote a lot of their requirements when it comes to having maintenance, having capital plans, and making sure that the people who are living in these buildings are aware of what the issues are and that a plan has been made to ensure the safety, right? Because this is not good for Fannie and Freddie if they're purchasing all of these mortgages for these properties that are built on sand and they're made out of toothpicks and chewing gum, and suddenly 100 people die. Like that's not a good thing for Fannie and Freddie either, right? So yeah, they've had all kinds of restrictions that they've put into place over the last couple of years. And my understanding, having spoken to a couple people who work kind of in this space, is it's a lot harder to get a condo loan if you're, and in a lot of cases, they have these lists of condos that Fannie will not buy loans on. And you won't even know it. Like and this happens in New York, this happens in Florida, this happens, obviously there aren't like a tremendous amount of condos in all markets across the country, but where there are a lot of condos, sometimes you won't even know until you go through the process, and you'll work with a lender and everything will look good. And then suddenly Fannie's like, no, sorry, dude, you got to find another building, I guess. Like we don't buy in this one. And again, like it all comes down to this maintenance issue.
And, to me, there's a larger issue here. We talked about the fact that there's deferred maintenance over decades, right? And
Yeah.
The story brings up the fact that, the condo boards, most of which are made up by people who live there, but might only live there part-time, whatever. They're the ones who voted for years, like, yeah, no, just put it off. But we can fault them, but I think in so many ways, the whole housing market does this. If you think about all of the places people live and build and rebuild, where there's a lot of climate risk, right? I mean, this isn't specifically climate risk. It's really just kind of like what happens in that area. But I think that, there's so many, things we could talk about. So I bought a house in Colorado a couple years ago, as you know.
I remember this one.
And, then there was a fire that got pretty close. It was a log cabin. I was like, okay, it's logs and there's a fire, and that county is so dry. And the risk is so high. You have these high winds, that should be priced in. And it really wasn't. I'm just being honest. It wasn't. And the insurance was so cheap at the time we did it. We're coming from Texas, where the property insurance is so high, right? That when they first told us what the insurance was, we're like, no, what's the insurance? And they told us, we're like, a month? That's it? And so you just really think like, there are a lot of places in this country where the risk is not priced in, and that's why people can, continue to build or continue to buy in places that are pretty dangerous.
The reality is nobody in the industry actually wants the risk priced in, because you would be blowing up markets left and right. Do you think people living in, I don't know, Key West are going to be paying like $29,000 to $50,000 a year just in insurance to adequately cover like whatever that risk is? Like, no. Also, by the way, there are so many home insurance scams in Florida too that makes that market even more complicated. Nobody politically really wants the GSEs to price in these risks, or the FHA or VA, HUD, anyone like that, because it would make housing even more unaffordable.
Right.
And that's, so now we have two problems. Housing is still unaffordable, by the way. Like we didn't fix that by any stretch of the imagination. But we're also not accounting for the real risk, right? And so, that the risk is gradual. Like it usually doesn't, unless like, we have like a Mount St. Helena, another massive cataclysmic weather event that knocks out like huge areas of the country. Like we're just going to see this sort of pitter patter year by year, where more of the land, more of the properties are vulnerable to these risks. And how do you price it in at this point? I mean, I guess maybe when people refi or when something actually does happen. You now have in some of our biggest states in the country, you have insurers of last resort that have effectively taken over all of the insurance on properties, right? Like California, like, hey man, can you buy a home in Southern California and you try to get private fire insurance? Like you can make a fun game out of it, like a challenge, like a quest, right? Try to get flood insurance in in parts of Florida. Louisiana, right? Like you're not going to. No insurance company would ever, they're just not going to do it straight up. And so it means that you have government funds that are dead. By the way, these government funds are also not actually, they don't have enough money to cover even the risk. Like they're not even close. We're talking like maybe 20% coverage, like at best, right? So yeah, I mean, this is a little bit depressing now. We ended up making this very depressing.
A lot. Yeah. No, I know. It's just these are the things that are really intractable. I mean, it's hard to see what the outcome of how we fix this, and so we all kind of do it. I mean, there's a lot of things like this where it's kind of like, okay, I mean, like I bought that house in Colorado. If the risk had been priced in, there's no way I could have afforded that. No way.
Well, I mean, maybe I don't want to be the big government guy, but maybe if you're looking at the fact that the vast majority of homes in this country are financed by mortgages that are either purchased by, government-sponsored enterprises or are insured by the FHA or HUD, whatever. Maybe they need to be looking at, okay, should we just subsidize the cost of a roof, like a really good quality roof for everyone in this state or this region or anyone, according to the latest flood maps or I guess like convective storms, right? Where you are in Texas, like I've seen videos of the hail that comes down in like Texas, like that's scary stuff. Or flood risk where I am, right? In Brooklyn, like my son's daycare is a couple blocks from, I mean, you'd be like up to your waist. I'm not very tall, so it would be like up to my neck, I guess, in like floodwater, like gross ass floodwater from the Gowanus Canal, which is a super fun site, right? Like, and we're talking Brooklyn, like there are huge amounts of impervious surfaces in everyday cities. Like in Dallas, there are huge areas where you just have like random ass flooding, right? Like, you'd never expect it. And so, yeah, I don't remember what my point here was, but this is.
No, your point was that maybe the government, because they're the backstop for the loan, that they should also do something with with the insurance.
Yeah, I mean, maybe the government needs to step in because private insurance is not walking closer to the flames. They're only retreating. They're not going to be messing with this stuff anymore. It just, they're going to a lot of states and saying, we just cannot provide this kind of coverage if you're going to deny us, our annual 10%, 12%, 15, 20% premium increases because all the insurance boards appointed by the governors are saying no, right? Which is sort of the dance that regulators play. And so it's going to have to come from somewhere. You can't just have hundreds of thousands of people, millions of people living with extreme climate risk in these homes. And we haven't even talked about, you remember, God, it was like a month ago, there was even by Phoenix standards, like an insane heat wave. It was like 130 something degrees. People's blinds literally melted to their houses. People's phones like melted in their hands. Like, you think that's going to get better? Like, so, we need big ideas. We need big solutions. And I'm sorry to say I don't see any of that coming around the bend.
But I wonder, because we do have a lot of listeners who are at different think tanks. They're at different policy centers. You guys let us know. What are we missing? What is out there that's being proposed that maybe no one's paying attention to, that, you have a couple summers like that, like in Texas last summer. It was just incredible. This one's been better, but we've had a couple hottest days of on record of all time the last couple weeks. And so I think you have some things like this, and then people are ready to act, right? I mean, there's not a lot of alternatives. Our backs are against the wall. So would love to hear from our listeners if we're overlooking something. Hopefully there's a silver lining here. Save us from this, from this depressing conversation. The other thing I wanted to bring up, James, because, lots of people don't want to talk to me about politics. I love politics. I would talk about politics every day. I don't want to be on one side or the other. I just love the whole thing. So we had so much news over the weekend. Actually, over a 10-day span, we had incredible things happen, right? We had an assassination attempt on a former president. He picked a vice president. We had this CrowdStrike craziness going on. And then we had the current president step down from running again, and his vice president stepped up. I mean, these are unprecedented. We can use that word again for this part of the political cycle. So you and I, last time we talked a little bit about some things that the Trump administration might do if they were in. Now we've been looking at the other side. We were planning on doing that anyway, but instead of Biden, now we're looking at Harris. So any thoughts after last weekend that you want to share?
Yeah, I mean, we did take a look at what a Kamala Harris presidency could mean for housing. And I think really the central question is the Biden administration has come out with actually quite a few housing proposals. They have been pretty out front. I personally, as someone who studies and reports on this, I don't think they're especially good policies personally, but they are policies nonetheless. And it's more than can be said in a lot of cases on the other side, where you're just kind of left wondering, like, is this serious? Is this real? Is this something they would pursue? Is there actually strategy here? So the question is, would Harris tie her wagon to a lot of the proposals that the Biden campaign has put forth over the last year or two? And a lot of those proposals have really annoyed housing industry professionals and a lot of the policy wonks. Like, God, it must have been like a week or two ago. Do you remember Joe Biden said his proposal would be to cap rent hikes at 5% nationally for 2 years? And that would apply to landlords that own more than 50 units. That's dumb. I'm sorry. That's stupid. Like, it's just a stupid idea. It's not a good idea. It's not a serious policy proposal.
This is what I love about you, James, is like, you will just set it straight. You're like, listen, I'm just not going to put up with this BS. Like, this is what it is.
It's a bad idea. It doesn't make any sense, right? It's like, whatever. Anyway, so again, like, this is, now there would be exceptions to, I think it's new construction and like rehabs, but it just, rent caps are not the way to go. And let me give an example. I live here in New York City. I've lived in this area my entire life. I have always been fascinated about the market economics of rent control, rent stabilization, and what we call like free market, apartments, where the landlord can say it's $12,000 for this unit, it's $2,000, whatever it is. Having caps, having more regulations on these markets, they don't improve the marketplace overall. What they do is you have separated clear classes of winners in tenants, and it means that the property owners don't maintain those buildings, and they cannot pay for repairs when things go wrong, and like their property taxes go up, insurance goes up, everything goes up. Rent stabilization and rent control in New York City have been policy disasters. They happen. And I'm not like a conservative libertarian type or anything like that. Like, I'm fairly middle left. They're bad policies, because you're restricting the market and you're telling people, even though it costs this, you can only make that. And you do that and you're not going to build more housing. Well, I actually saw this proposal, I guess it was a week ago or so. This came out. We talked a little bit about this online. What if Fannie and Freddie got together, the Treasury says okay, the FHFA says okay, and they basically fund mezzanine financing for multifamily projects? And the math could potentially pencil out, because you're going from a private marketplace with very risk-averse lenders, mostly large and regional banks, and you're saying, okay, we're going to go from 15, 16% interest rates down to less risky 6 to 8% interest rates, Fannie and Freddie, right? And they'd be able to put up basically 20% of the financing of these projects. Whereas right now, it's usually about, the developer puts up 40%, and then they're looking for a loan of about 60%. And it's hard to get those to pencil out,
It's so hard. And I will just say, like, the fiscal conservative might say, well, we're just adding to the debt, whatever. Doesn't it seem like at this point it's just monopoly money? Doesn't it seem like, where does it go? How are we ever going to pay it back? What's going to happen? So it's like, shouldn't we put that towards housing? There's a lot of things we're spending money on that maybe housing would be a better thing to spend money on.
We have about 7 million units that we need to construct in this country.
Right. That's
7 million, right? And again, this is maybe not a conservative estimate, but I actually think we undercount the amount of immigration that we've had over the last couple of years. I don't think we do a very good job of it. I would be surprised if we're even close to the actual number. And so it might even be more than that. We need to develop a national strategy. You remember all the talk about a housing czar, right? We heard this at MBA secondary in New York a couple months back, right? I think that's a great idea.
Let's do it. Okay, we are campaigning for a housing czar. Whoever wins, please have a housing czar, because we have HUD. I interviewed Adrienne Todman, the interim HUD director at MBA Secondary. I was like, well, who should own that? And she was like, well, housing's in our name. And I'm like, good for you. You and I have sat through a lot of administrations where HUD was just the backwater. It was not where a lot of the power lie, but there's no reason for that, right?
HUD doesn't have the greatest track record. I live in New York, and NYCHA's probably the worst landlord in the whole city. And we just talked about how many bad landlords and how many problems there are with housing policy. So I would volunteer myself ahead of HUD. I know it's selfish of me, but I think I'm ready for the challenge. I'm ready for the new job. So
I need you to keep your current job.
If you're not too salty about it, Adrienne, call me up.
It's a thankless job, though. Let's be honest. That is a thankless job.
This one is too. That's okay.
Ooh, the shade. But I do have to give HUD some real credit. So we just had our AI summit. We had Vinay Singh, who is serving as their CFO and also their chief AI director. And I'm just telling you, he was an audience favorite. He owned the stage. He had really interesting things to say, and they were doing innovative things. And I just have to give a shout out to that, because that is hard to do. Yes, HUD, you should have been there. It was amazing. And that's why we had a call with him, and I was like, I got to get this guy on stage. I want him to share what he's doing.
Are they still on floppy disks? Hold on. Wait a second.
No, they're not. And also they have one, a modernization campaign, and then they have the AI separate, because that's, there was an executive order where all of the agencies had to come up with these new plans. So anyway, I just want to give a shout out, because he was phenomenal, and he has made me a HUD fan. So there you go, especially on that front. So.
Well, the irony, of course, is if they'd all been on floppy disks, that major global catastrophe on Friday wouldn't have happened.
I know. I love all the memes where it was like, the people who had the oldest technology were safe there.
Well, that's why the nuclear codes, right? That whole thing is on floppy disks, apparently.
Oh my gosh, that's crazy. Are you being serious? I didn't know that.
No, I'm totally serious.
Oh my gosh, that's crazy. Okay, well, we are out of time. We have run the gamut today from Florida housing, insurance, all the way to you being the housing czar. So you know what? If you can keep your day job and do that at night, because you have so much, free time.
So much free time with a toddler and a newborn, yeah.
With your small children, I will campaign for you. But James, thanks so much for being on. I really appreciate it.
Thanks, Sarah.